Ahoy there, mateys! Welcome to the high seas of finance, where ships carry precious cargo, not of gold or spices, but of something far more valuable, your hard-earned money. Today, we'll be setting sail on a voyage to understand the world of bonds using trusty ships as our guide. Meet the leviathans of the financial ocean, government bonds. These grand galleons, sturdy and reliable, carry the safest cargo of all, the promise of your government to repay your loan. They may not be the fastest, but their smooth sailing and predictable returns make them the backbone of any investor's portfolio. Now, let's turn our sights to the nimble brigantines of the financial seas, corporate bonds. These smaller, swifter ships carry the debts of businesses, offering potentially higher returns than their government counterparts. But be warned, their journeys can be rougher, with the risk of the occasional storm or pirate attack, defaults or market downturns. But fair winds and following seas aren't all that matter on this financial voyage. The ocean currents of interest rates play a crucial role in every ship's journey. When the tide rises, rates go up. Our galleons may slow down, but the smaller brigantines can get tossed around. Conversely, falling tides, rate cuts, can give the brigantines a boost, while the galleons maintain their steady pace. And let's not forget the power of the waves. Unexpected storms like economic downturns or global events can send even the sturdiest ships off course. In these choppy waters, government bonds with their safe harbours become even more valuable, while corporate bonds might need some expert manoeuvring to stay afloat. Now, navigating this vast financial ocean requires a keen understanding of the archipelago of risk and reward. Government bonds, clustered around the safe central island, offer lower returns but calmer waters. Venture further out, and you'll find the islands of corporate bonds, with their higher potential returns, but also greater risks of choppy seas. But fear not, mateys. With a trusty compass of knowledge and a steady hand on the financial tiller, you can chart your course through these treacherous waters. Remember, diversification is key. Spread your sails across different ships, government and corporate long and short voyages to weather any storm and reach your financial destination. And as the sun sets on our financial voyage, remember, even the roughest seas eventually give way to calm waters. By understanding the language of the waves, the dance of the tides and the resilience of your ships, you can navigate the financial ocean with confidence and reach your port of plenty. So weigh anchor, set your sails, and prepare for a rewarding journey through the world of bonds. Our voyage has been smooth so far, the sun shining, the wind fair. But as with any good seafaring tale, there's always the whisper of a storm on the horizon. In the world of bonds, that whisper comes in the form of an inverted yield curve. Imagine this, mateys. The ocean currents, the interest rates, suddenly start flowing backwards. The normally speedy brigantines of corporate bonds slow down, while the mighty galleons of government bonds pick up the pace. It's a disorienting sight, a sign that something unusual is brewing beneath the surface. This inverted curve, it's like a sailor spotting a Kraken on the horizon. It doesn't necessarily mean a hurricane's coming, but it sure sends a shiver down your spine. It could be a temporary squall, a warning sign, or a prelude to a full-blown economic recession. In these choppy waters, our corporate brigantines, with their dependence on the smooth sailing of the economy, are the first to take a beating. Investors, spooked by the inverted curve, might seek shelter in the safe harbours of government bonds, leaving the smaller ships to weather the storm alone. But even in the midst of the storm, there's hope. Remember, mateys, we're not just passengers on this voyage. We're the captains, the helmsmen of our financial fates. And like any seasoned sailor, we know how to adapt and navigate the roughest seas. First, we batten down the hatches. We diversify our portfolio, securing some provisions in the calm havens of government bonds while keeping a watchful eye on our corporate brigantines. We weather the storm, adjusting our sails and course as needed, ready to seize any opportunity that arises. And most importantly, we keep a keen lookout for that elusive black swan event, the unforeseen storm that could capsize even the most seaworthy ship. We stay informed, read the economic winds, and prepare for any sudden squalls. And eventually, mateys, even the fiercest storms pass. The sun breaks through the clouds, the waves calm, and the inverted yield curve rights itself. Our brigantines, battered but not broken, sail on, wiser and more experienced for the journey. The voyage was rough, but we made it. We learned the perils of the inverted curve, the importance of diversification, and the constant vigilance needed to navigate the ever-changing seas of finance. And now, with scars but also stories, we raise a toast to our resilience and set sail once more, ready for whatever treasures the next financial adventure may hold.